California homeowners will have to foot $500 million bailout for the FAIR Plan.
And the last resort insurance plan needs the additional funding so that it doesn't run out of money after already paying out more than $900 million in claims in the Palisades and Eaton fires. And on your side's Christine Lazar is joining us now with more on what this means for consumers. Christine.
Well, it's not good news, I'll tell you that much. About 500,000 policies in the state are carried by the California FAIR Plan. A lot of people in the Palisades were on that insurance, having been dropped by State Farm. The insurance commissioner says the FAIR Plan needs $1 billion so it can continue to pay claims on time and in full. And 1/2 of that will have to be covered by the insurance companies that pay into the FAIR Plan. The FAIR Plan covers those who can't get traditional insurance due to their wildfire risk. I'm joined now by Harvey Rosenfield, the founder of LA-based Consumer Watchdog. Harvey, Consumer Watchdog released a very strongly worded response to the commissioner's plan, saying the FAIR Plan is underfunded because insurance companies dropped too many homeowners ahead of the fires. Can you elaborate on that?
Yeah, I mean, over the last 2 years, the insurance industry has been demanding deregulation. They want to charge more. They want to ask ratepayers in the state to pay far higher expenses. Even before the fires, it was billions of dollars of rate increases had been ordered. Now, this FAIR Plan, this insurer of last resort, says it doesn't have enough money to pay all the claims from the fires in January, which possibly is true, but under California law, that's the responsibility of the private insurance companies that dumped all the policies that went to the FAIR Plan. Now, Commissioner Lara has said, okay, people all over the state, all policyholders, whether you're a member of the FAIR Plan, whether you have a FAIR Plan policy or not, you're going to have to bail out the insurance companies. And that's just a $500 million bailout to start. Could be, and it will likely be much more.
So the insurance companies maintain they were losing money in California due to our wildfires and that they simply don't have the money to fund the FAIR Plan without this assessment. What's your take on their position?
Well, decades ago, the California voters decided that they needed to have the insurance companies prove that they need a rate increase before they get it. And so they need to come in and show that they have to raise their rates, that this fee is justified. But the critical thing is, under the current law as we read it, nothing authorizes the FAIR Plan to allow the insurance companies to pass through to every policyholder in the state a piece of this bailout, which will be $60 to begin with, we estimate. Although it's not clear exactly how the insurance companies are going to pass this through to us policyholders, and it could be much more depending on if losses and claims rise from the fires in January.
And we're running out of time, but I just want to clarify, that would be $60 for everybody, no matter who your insurance is, no matter where you live, and that is just a start. And of course, that's anybody who lives in any area, not just fire zones, correct?
That's correct. Every homeowner policyholder, business policyholder that has commercial insurance, everybody's going to have to pay to bail out the insurance industry. And we don't think that is allowed by the law. But Commissioner Lara is going to go ahead and do it anyhow.
All right, Harvey, thanks for joining us. And for more information on Consumer Watchdog, as well as the insurance commissioner's full statement on this FAIR Plan $1 billion bailout, just go to our website, kcalnews.com/SeenOnTV. Sheba and Rudabeh, back to you.
All right, good to have that broken down. Thank you so much, Christine.